Okay, so this is the first time you attempted to prepare the entire final accounts. Your income statement 1, your income statement 2, and your statement of financial position all together. And I would imagine that you found this task tough, okay, but you're going to get better at it. That's the thing, you're going to get better. No one gets these to balance the very first time they do it, but it's the effort and the attempt that you make at getting it correct that's going to stand to you, because where you make a mistake once, you won't make that mistake a second time. So in a way, the more mistakes that you make and correct, the better you're going to get at doing these, okay? So the first thing I want to do is have a look at the trial balance. Now, I can't write on this page, unfortunately, but we can follow the arrows and see what we're talking about. So down along the trial balance, in the position column here, you want to write where each of these items are going to go, or which account that they're going to go into. Okay, so the first thing we have is issued share capital, and that's going to go into the financed by section. Buildings go into the fixed assets section. Cash is always a current asset, so it goes into the current assets in the statement of financial position. Salaries and wages are considered an expense. So our expenses go in the income statement 2, the second part of your income statement. Sales and purchases, they go into the income statement 1, the very first part of the income statement. Marketing and advertising, they go into income statement 2 as they are an expense, and the same with light and heat, income statement 2 because they're an expense. Then we have the bank overdraft, and a bank overdraft is what we consider a current liability. So that means it goes into the statement of financial position as a current liability. A long-term loan, well, long-term loans go into the statement of financial position under the financed by section, so they're going into the financed by section. Equipment is a fixed asset. The profit and loss balance on the first 16, now that's an important one there. That goes into our financed by section, and onto that we're going to add our retained profit. We're going to add the final figure from our income statement, okay? So this here, okay, it goes into our financed by section, the 48,950. Next, we have insurance, and insurance is considered an expense, so it goes into the income statement 2. Carriage in, so carriage in is what? It's the money that you pay to get goods delivered to you. It goes into income statement 1, okay, income statement 1. Opening stock is also income statement 1. The interest on an overdraft is considered to be an expense, and expenses go into income statement 2. And then general expenses, this would also be considered an expense, so it goes into income statement 2. Now finally at the end, we can't forget these two, and these are really important. If we have items outside of the trial balance, it's usually only going to be closing stock and depreciation. These items go into our final accounts twice. Now think about this, closing stock. Closing stock is needed in 2 places. It's needed in our income statement 1, and it's also needed in the current assets in the statement of financial position. So our closing stock goes into 2 places, income statement 1 and current assets. And our second thing here, depreciation. Well, depreciation also goes into 2 places because you remember it's an expense in the income statement 2, and also it goes into the fixed assets section of our statement of financial position. So if you can label all of these correctly, it makes preparing the final accounts a lot easier. I mean, like, I wouldn't even attempt to do a final accounts without labeling everything correctly. So make sure you do that first. Sorry now I couldn't write on this, but hopefully you got to take it down as I did. And if not, just stop, rewind, and fill it in. Again, listen to this again and fill it in. Now I'm going to go now to the actual accounts. We're going to start with our income statement, okay, and that is not the income statement. Let's see. Sorry about this. Sad. Yeah, the state. I've done the wrong thing again. Here we go, the income statement. Sorry about that. So what is the first thing that we put into our income statement? And it's sales. 980,000 into the third column. Less cost of sales. Starting with our opening stock, our purchases, and the carriage in. Add those three figures together to get 802,200. And then from that, you take away your closing stock to get 757,200. Now, remember what the headings are. Sales, less cost of sales, which means that we do sales, 980,000 minus the cost of sales to give us 222,800 to be our gross profit. Okay, and make sure you've gross profit written in there. Now, what do we do from here? Well, we're going to less the expenses. Okay, so less the expenses, and we have the expenses now listed out for us because we have marked them all off in our trial balance. So our expenses are marketing and advertising, 16,400. I'm just going to step away for 1 second. Sorry about that. So 16,400, I'll give you a chance to write anyway. Then we have insurance, 5,750. We have our salaries and wages, 85,000. We have the interest on the overdraft, 750. Light and heat, 8,200. General expenses, 25,700. And then we also have to deal with the depreciation. So to get the depreciation, you multiply the buildings figure, which was 400,000, by 2 over 100 to get 8,000. And you multiply the equipment figure, which was, let me find it, 75,000 by 15 over 100, which gives you 11,250. You add all your expenses together and write the answer in the third column. That gives me 161,050. And then from that, okay, you minus it from our gross profit, which gives me a net profit of 61,750. We're going to use that figure again in your finance by section. So that 61,750 is our net profit. Okay, so from there we're going to prepare our statement of financial position. Okay, so the statement for financial position. So the statement of financial position always begins with our fixed assets. So we have buildings here, and we've already calculated the depreciation of 8,000 minus them to get a net book value of 392,000. Then we have our equipment minus our depreciation that we calculated already, 63,750 in total, all those columns. Remember, it's a double line into the cost and the depreciation column, and no line. Even though they have it in your workbook, ideally we shouldn't have line under the net book value because we're going to use that figure again. So now we're going to go on to current assets. So current assets include our closing stock and our cash. They get written into the second column, and you add them together to get 47,250. Our next heading is our current liabilities. We only have one current liability, which is a bank overdraft. And you minus those two figures to get what we call the working capital. The working capital is really important because it tells us how able the business is to pay their debts as they fall due. Okay, so if the working capital is high, that's good. If it's a negative figure, that's really bad. Here it's positive, it's 24,950. So what do? Well, we look at our net book value of our fixed assets. I'm just looking for the top thing here. If I go down, there we go. And you add those two figures together to get our total net assets. This is the figure that we want to get at the end of our finance by section, so let's hope we do. So our last heading is our finance by section. And our first thing that we write in always is the share capital authorised and issued. So it tells you at the very top of the question that the authorised share capital is 350,000. We write that down, but we draw a double line under it because we're not going to use it. Authorised share capital is how many shares you're allowed to sell. Issued share capital is how many you have actually sold. And we can see from the very top of the trial balance, they've only sold 300,000 in issued. Then we have our reserves. So our reserves are the figure of the profit and loss balance on the first of the first 16. And also we have our retained earnings. So the figure at the end of the income statement, which is 61,750. We're going to also then include the long-term liabilities because we have a long-term loan here of 70,000. So that gets included as well. We add up those four figures and we get 480,700. So we're balanced. That's correct. Fantastic. Well done. Now, I don't expect many of you to have got that fully out, okay, because you haven't done a whole accounts before. But now that we have done it, go back and correct what you need to, and we're going to attempt another one. So this is going to be your assignment for 2 days again because they're long. We're going to attempt question 2 in the workbook. All right, thanks, guys. Let me know if there's any questions.